You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Solana, Doge, and more. Cryptocurrencies and digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity, provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments throughout the world's leading crypto derivatives markets. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. The Crypto Rundown is brought to you by Amber Data. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amber Data delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amber Data eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. Now it's time to dive into the exploding world of crypto derivatives. It's time for the Crypto Rundown.
All right, everybody. That music means we are back once again. Time to hold court on the Crypto Rundown, breakdown everything going on in the world of crypto derivatives out there. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which all of you folks are mainlining these days. Remember, if you're just listening to the Crypto Rundown, you're missing out on nearly a dozen other programs out there, including for a lot of you who are newer to the world of options and derivatives. By all means, Options Bootcamp, Options Playbook Radio, those will get you up to speed on all the terms we throw around fast and loose here on the show, like Skew and Volatility and all that fun. If you want to get a little bit more advanced, of course, the Option Block and Volatility Views. If you want more shows that touch on the world of crypto in some capacity, This Week in Futures Options also gets there quite frequently. So make sure you're checking out the full network wherever you're getting the Crypto Rundown. And then, of course, if you want to go above and beyond, you have your own questions, your own comments you'd like to have answered in our pro Q&A sessions. Maybe, of course, you want to check out some unusual activity. You want to be the winner of our pro trading crate for the month, like Wolfpack just won on the option block an hour or so ago. Congratulations to you, Mr. Wolfpack. The only one place to go, theoptionsinsider.com/pro is the place to go to learn more. As we learn who's joining us this week, it is time to roll out the Crypto Hot Seat.
Forget about cold storage. It's time to turn up the heat on thought leaders from the world of cryptocurrencies and digital assets. It's time to take their place on the Crypto Hot Seat.
All right, everyone, welcome to the Crypto Hot Seat, the portion of the program where we welcome on guests from throughout the world of crypto derivatives and indeed beyond, and proceed to pick their brains for the benefit of you, the listener. And next up on the program is a newcomer to the program and indeed to the network. He is Darius Tabatabai, the co-founder and CEO of Vertex. Darius, welcome to the Crypto Rundown program.
Thanks, Mark. Thanks for having me.
And Darius, as we are wont to do with all of our first-timers here on the network, why don't you go ahead and give our audience a bit of an overview of your background in the world of crypto, as well as what it is you folks do over there at Vertex.
Sure. So Vertex is a Perps protocol, but we do spot. We have a money market with biggest trading venue on Arbitrum. We're the second biggest money market on Arbitrum, so we're pretty large and we're in a number of different ecosystems. And my background's in trading, so Vertex is kind of the product I wanted to trade on. So we raised money and we built it. So prior to Vertex, I was trading in crypto. And then before that, I ran a hedge fund in commodities. And then before that, I was an options trader and I ran businesses in large investment banks. So the team were like, you got to meet Mark. He's an options nerd. You two are going to get on. So here I am.
I've had a lot of people from the world of derivatives on the network over the years. A lot of them have interesting, let's say, inflection points, things that lured them to the world of crypto. What was that for you? What was it that really opened your eyes to say, maybe there's something to this crypto world. Maybe I should investigate it further?
I think I kept not investing and watching the price go up. And it sort of piqued my interest to see what is it about this asset class that is so reflexive. And historically, I'd always kind of made most of my trading chops on taking a risk by jumping into things that were just a little bit weird and wonderful compared to everything else that was going on. And so eventually I just thought, yeah, this is cool. I'm going to jump in. So I first got my feet wet when Deribit launched. I was like one of the very early traders on that. And then just always had my eye on it since then, and then went full time about 4 years ago.
Well, as you mentioned, Vertex is a decentralized exchange. We've had a few of you folks on the show over the years. There are obviously quite a few people playing in that field. So when I say there's yet another decentralized exchange coming on the network, some of our listeners might be, okay, here's yet another one, sir. So what is it that sets Vertex apart, makes you folks different?
Yeah, I guess this is such a politician's answer, but I'm not a big fan of the phrase decentralized exchange, I prefer to think of it as a self-custodied exchange. I think that tells you a lot more, and it makes you aim for something a bit better.
SEX might be a more fun acronym than DEX. I don't know. You might have a little more mileage with that.
Yeah. Unfortunately, that matches up with centralized exchange, so we can't use that one either. I take your point. But yeah, I think the main thing is two things, really. One is we are the only, as far as I'm aware, fully cross-collateralized, cross-margined, self-custody exchange out there. That means you can put a number of different collaterals in, trade them as spot, use them as collateral for trading your Perps positions. And that offers a lot of different capital efficiency things we can do that are kind of cool and funky. And then I think the other thing is that we've sort of built this cross-chain sequencer we call Edge. Edge basically turns all of the Vertex instances on any chain into this kind of synchronous network. So the liquidity you see for our Perps markets on Arbitrum is the same liquidity you'll see on Mantle, Blast, anywhere else we go. So it's kind of cool because we sort of solved the cold start problem. If we put an instance on a chain, you'll go there as a user and you'll never know that all the liquidity might be coming from a different chain.
That's funny. We're talking about perpetuals here. And I recently had a conversation with someone off of the network who is a long-term former market maker, been in the derivatives space for decades. And I mentioned the world of perpetuals to him, and he looked at me completely blankly. He had no idea what I was talking about. So I started to explain perpetuals to him in the crypto space and what was being offered on that front. And he looked at me like I was completely an insane person. So it was kind of eye-opening to me. We've been doing this show for a while, so I've been kind of in the bubble for a while. So things like perpetuals, make sense to me. I've been aware of them for a while, but there is still a enormous universe out there, particularly even people who are very experienced derivatives traders who know nothing about what we're talking about here, the world of perpetuals. So let's start there. From your perspective, you've been around the derivatives game for a while. What would you say is the value added for a perpetual for someone who's maybe either new or even experienced to the world of derivatives? What are perpetuals bringing to the table?
So when you trade in traditional markets, a lot of what they trade is what they call dated futures, right? How they get liquidity and leverage. And that means that you kind of place a bet or a trade on what the price is going to be of a given instrument at a given point in the future. The problem with that is when that date comes to the current date, you then have to roll your position. So you have to like sell the position and buy a new position in the background. And it's quite a lot of maintenance. You know, anyone who's traded commodities for a long time will tell you, you know, horror stories about they thought they were going to have to take delivery of 10 tons of sheep wool from Australia or some equally painful BS situation, right? The beauty of perpetuals is all of the liquidity just becomes in one instrument that never expires and is always rolling. And the cost of leverage is just kind of baked into the mechanism of how the product works. So it's a very elegant way to put leverage into a market. Far more elegant than doing dated futures, which is so common in TradFi. So from that point of view, it's super interesting. And when I first started learning about them, it was inverse perpetual futures on BitMEX, which is even more funky, right? So you use Bitcoin to base on Bitcoin and just traded and funded and paid out in Bitcoin, but it all just kind of made sense once I looked at it a bit, and I never looked back really. It's kind of a cool instrument to learn about.
Well, you're coming to us on the show at an interesting time. We were coming, hot off the heels of a very insane week, kind of across the board last week. Last week was one of those weeks that really proved the old adage that when it all hits the fan, correlation goes to one. We saw sell-offs across the board in the broad equities and a lot of other assets, including in crypto, Bitcoin and ETH taking it on the chin off 20-odd, 30-odd%, depending on when you're looking. Starting to claw some of that back this week. But of course, we saw volatility exploding back into the triple digits again last week. So just a really crazy week last week. Walk us through that. What were your thoughts as an old school derivatives trader? What were your thoughts on the vol we saw last week, the price action? And did you see any interesting activity as a result over there on Vertex?
Yeah, so I wear two hats, right? I have my old option trader hat where you go, volatility, fantastic. And then I've got my Vertex hat where I go, volatility, fantastic, volumes. I wonder how many people got liquidated. I wonder what problems are arising. I wonder if anything's broken anywhere. Because the thing is, when you've got a trading venue, it doesn't even need to be that something on your side is broken. It might be a partner or someone that trades on your exchange has a problem. And then what you'll see is like liquidations, rush to the door, whatever. So there's a lot of stuff going on. You can imagine with the moves that we saw, I think it was our biggest ever day for liquidations on Vertex. I think we saw about $60 million of open interest got liquidated on one day effectively. And most of that was in the course of an hour, which is kind of crazy. But mostly everything worked as well or better than one might have expected. So we were pretty proud about that. It's just one of those things, when people need to be liquid, everything gets sold. And the problem with crypto is it trades 24/7. So I think when you get news out late on a Friday or market moves late on a Friday and then markets are closed the weekend, we just get absolutely hammered as people just liquidate positions to make sure they got some dollars on their books on the open on Monday morning.
That's been a hot talking point in the world of, traditional equity and now options markets for a while. This notion that maybe the traditional markets should start stepping into the world of 24/7. Crypto has been that pretty much since the onset, as you mentioned there, really. Over the weekend, there isn't a lot of other liquidity to be had. Crypto sometimes feels the brunt of it out there. I'm curious, as someone who's had feet in both worlds now, do you see that as a benefit, the 24/7? I know there's a lot of other people out there who say, you know what, there is a benefit to having an opening and a closing bell. There is a benefit to having a bit of a respite. Cooler, saner heads can prevail where you don't really have that off button in the world of crypto. So sometimes in these illiquid times, you could get these aberrant moves that maybe wouldn't otherwise play out that way. So I'm curious, where do you fall on that divide? Do you think it's a beneficial thing for crypto to be nonstop, or you think it could benefit from maybe a bit of an off button? And the same thing for the traditional world of options and derivatives? Do you think they need to follow suit and go 24/7, or is there, again, some benefit to that little bit of a pause, a little bit of a respite?
I think it's kind of forced on us, right? If you want to have DeFi, so you want to have like trustless, permissionless systems, you actually need the liquidity to be up and running all the time. If you've got like centralized exchanges where you've got centralized clearing houses and they can go and negotiate if something big happens over the weekend, it kind of makes sense to have that break. I think from a personal point of view, certainly if I was still trading actively in the way I used to, I think crypto might have killed me if I was doing it too long as a young guy, It's good to switch off for the weekend, especially if you're the sort of person that will be a successful trader. You tend to have a very compulsive, kind of obsessive personality. And that can mean that if the market's always on, you're always on, which is a quick way to burn out, So I can see both sides of it. I think as I get older, my preference is for a little bit of switch off time, but luckily I have a very turned on and smart team who deal with things when I'm maybe away from the keyboard.
It does seem like the answer to that question does vary with the people's degree of experience. People who've been doing it for a little bit, they tend to value that off switch, and the people who are maybe the people who are a little bit I'm not going to say there is some of that. You're right. I'm not going to say hunger, but people, you're right, who are glued to their keyboards 24/7. They want everything 24/7, and I get it. It makes a certain amount of sense. Yeah. But people who've been doing it for a while, they've learned to appreciate taking a step back, having a life. Look at the traditional world of options now, Darius. It's been consumed by zero DTE options trading. Effectively, everyone wants options that die the same day because there's no overnight risk at all. So it seems to me there's two very, very differing trends right now. People are talking about wanting to go 24/7. A lot of the people who come to our network who are, let's say, crypto native, they just expect that, they demand that. A lot of people in the traditional options world are going the other way. They're trading options that expire at the end of the day, specifically for that reason. They don't want to deal with overnight, let alone weekend risk. So it seems like two interesting, almost juxtaposing trends, Darius, out there right now.
Yeah, I'm going to sound like an old man now, I'll date myself, but I traded gold options for a long time. And when I first started trading gold options, there was no screen for option prices. There was an OTC market, and then in the afternoons, my afternoon, New York morning, there was a 4.5 hour session where they traded options on the floor, and you see volume go through, and then all the rest of the time was pretty much nothing happened. And that was the market, and it worked fine, Things got done, people traded risk, you could get big positions on, it was fine. But now, it's 24, 5.5 type of thing, and the liquidity is always on the screen, and you always know where the price is. It's just a very different game these days.
And I should mention here, as we're talking about all this cool stuff you guys have on your platform over there, Vertex, unfortunately not available for the lion's share of our listeners who are here in the U.S. I know that's not up to you folks. That's a regulatory thing, but you've been in this game for a little bit. Do you foresee any loosening of the firewall, any ability for, dare I say it, U.S.-based folks to be able to play in Vertex at any time in the near future, Darius?
Never say never. It really just depends on the landscape and what my lawyers tell me, We're just kind of mindful of staying on the right side of the regs. I think when you look at the political situation in the US and how young our industry is as a whole, I am optimistic that all these things will get resolved with time and there will be some clarity. But, for now, unfortunately, it is what it is.
Well, speaking of clarity, we got a little bit of clarity a few weeks ago. It seems like that news kind of got consumed by the massive market turmoil over the last week, but a lot of people were excited. We were waiting for a long time to see the ETH ETFs finally approved here and start trading in the U.S. Still no clarity on the options front. That's a rabbit hole we won't go down on this episode. There's too much anger there. We still don't have the options on the Bitcoin ETFs that were approved 7 months ago, but it's a conversation for another day. But the ETH ETFs obviously driving a lot more interest, a lot more liquidity in this space. I'm curious for you, Darius, as you've watched these approvals unfold. What are your thoughts on those and maybe their impact and any interesting trading action you're seeing as a result over there in Vertex lately?
Yeah, I think this is the route to mass adoption, right? If you're in the industry, it's easy to lose sight of how hard it is to get on an exchange, get your pass key set up, have a wallet. All of that's a bit scary and doesn't feel nice. The point where someone can have the option in their 401k to buy an ETF, put it on some kind of repeat TWAP where they put the asset in their portfolio and it becomes a thing they do with their retirement funds. It's a real asset. And the wall of money that will come into that asset over time will be big. And these spot ETFs are so cost efficient, easy to get on, liquid now, that I think it would genuinely be great for everyone. It's just, I don't think it's a right now instrument. People made a lot of comparisons to the gold ETF when it launched, but I was there when the gold ETF launched, and the difference was gold was a very well understood product, very widely accepted. Everyone that could trade gold did trade gold. The problem was that it wasn't like a liquid vehicle for doing it. And so people had been trading mining stocks and that had treated them terribly. So there was just a desperate demand for it. With Bitcoin and ETH, we still need to educate people on what crypto is and why they should have in their portfolio. But at least now we have the chance to do it. Before you just couldn't. So I think long term is going to be great. I think short and medium term, who knows? For us, the main expression of it we saw was earlier in the year when funding rates blew out. People were making crazy money looping funding on Vertex. We have a kind of unique feature where you could do spot perp basis as a cross-margined trade. And, some traders were making, I don't even want to tell you, sort of 300-400% running on capital because they could just lever up and hold very, very lucrative positions. So it was a crazy time. Now that's sort of cooled off and we'll see where the next leg of it takes us.
Speaking of things trading on Vertex, obviously you offer spot. You offer the perpetuals we were talking about earlier, but you come from an options background. Obviously, this show, we like getting into the options weeds whenever possible. Any prospect for options coming on Vertex down the road?
Never say never, but I don't see it coming anytime soon. I mean, I'm curious your thoughts on the options space generally, but I see it so dominated and well supplied right now by, say, Deribit and a couple of the others that the liquidity is almost more than the demand. I think Perps is such a good fit for people for doing leverage trading that the extra complexity of options just hasn't seen the adoption one might have thought. Like when I first went full time on crypto, I was like, oh yeah, there's going to be loads of opportunities in options. And the longer I spent in the time, the perp space is just so much bigger than the option space. It just doesn't feel like options are there yet.
Yeah, you're right. It has been interesting to watch that evolve. Obviously, Deribit kind of in the same legal area that you folks are, that a lot of our listeners here in the U.S. can't trade them, even though they're putting up a lot of volume. So for the U.S.-based audience, they've had a few choices out there. They have what CME has listed, which hasn't really lived up to expectations, I think, to put it mildly, in terms of liquidity on the options or the futures front, really. We've seen other attempts, like, of course, what the folks over there at what became FTX US Derivatives, the former LedgerX, they made a college try at it for a while. Their platform was mostly really used for covered calls and maybe a little bit of hedging out there. But yeah, you're right. We haven't really seen anyone really crack that nut yet and really provide the viable liquid product that folks can use to come in. In fact, for a lot of our listeners here in the US, they've turned to the ETFs and the options on them, like your DEXs and your BITOs that hold the futures. Obviously, they can't trade options on the regular ETFs yet. So we're seeing either options flow on the BITOs and the DEXs of the world, or, as you mentioned earlier, the miners, your Maras, or even other associated names like Coinbase. And that seems to be where the lion's share of the, at least Bitcoin and ETH options flow still is here in the US. So yeah, I think you're correct, Darius. We really have yet to Some of it is regulatory as well, obviously, but we've yet to really crack that nut on the crypto derivatives and crypto options front here in the U.S. So there you go. Maybe that's an opportunity for Vertex to come in and really change the game there.
I'm there for you, man. I'm going to be there. Don't worry. We're going to make shit happen.
We are waiting for that one player. We thought CME might do it. We thought maybe LedgerX early on, and a lot of things have happened since those platforms came online. We've seen people try physically settled and then now cash settled, all different ways to do it. And you're right, none of them have really set the world on fire there, Darius. Well, we got to keep on rolling with the show. This has been a fun conversation. We'll have to continue it another time. But before we wrap up, Darius, we like to leave our audience wanting more. So we touched on the prospects, or maybe lack thereof, for options coming to Vertex. But leave our audience with maybe a hint, a tease of what they can look forward to coming down the pike from you and the team at Vertex in the coming months.
Yeah, we got a big chain launch on Wednesday. I think that's going to be pretty huge. And then another one a month from now. So big thing is really the new chains where we're launching, because it's going to drive a whole lot of usage and a whole bunch of new users onto Vertex. So that's going to be super exciting. So keep an eye on that.
And which chains are you launching on really quickly? Which chains?
We have to keep an eye on our socials. It's not public yet. We're going to make the big announcement on Wednesday, but it's explosion then, and it'll be good to go day one. So yeah, keep an eye on Wednesday. Plenty of trading rewards, plenty to do.
I like it. When I said tease, you took me literally. So that is a good tease.
Yeah,
so,
there you go.
Give them a follow.
I do my best.
Give them a follow, listeners, at Vertex_protocol to learn more over there on the old Twitter/X. Well, Darius, I appreciate you joining us, and we'll look forward to seeing how these new chain additions unfold in the marketplace in the coming months.
Thanks, man. I appreciate it. Best of luck.
All right, listeners, now it is time to keep on rolling with a little bit of the old Bitcoin breakdown.
It's time to explore the latest trending activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody, welcome to the Bitcoin Breakdown. Hope you enjoyed that chat with the folks at Vertex. You know, we like to speak to all different platforms, even if, unfortunately, still the reality in the world of crypto is a lot of the cool stuff isn't yet available for you folks here in the U.S., but we like to chat with them anyway, just so you can see what is available out there. So someday, hopefully, the regulations make it so that you can at least access some of this stuff. For right now, if you go to the Vertex website, it pretty much says, you are banned. Go away. But intriguing content nonetheless, and indeed intriguing developments. The perpetuals are really just taken off overseas to a very interesting way. Be curious to see when and if we get the regulatory stuff sorted out here, if perpetuals can have the same leg to stand on here. I do really think perpetuals have taken off overseas because they're kind of a surrogate for the liquidity we have available now here in the U.S. derivatives markets in terms of futures and options. But we'll see. We'll see if they can thrive in a world where options and futures are thriving as well. Kind of interesting stuff. Speaking of thriving, let's see if the big dog Bitcoin is thriving this week. And the answer is, yeah, looking a lot healthier than it did this time a week ago, even if it is still below the 60K level. 59,078 to be precise when we kicked off the show. That is up from 54,731 where it was this time a week ago. So up 4,347 handles to be precise. The low came pretty much, it was right around during our show last week, 54 and change. And the high was, we did get north of 60K, 61,705. That was back on last Thursday. Ever since, we've kind of been vacillating in this range around or a little bit below the 60K level. You kind of had to know vol was going to come in this week after the insane amount of volatility we saw last week, and that is pretty much the case. It would take another wild week like last week to really maintain those vol levels, and obviously we're not seeing that. I think, thankfully, a couple of weeks in a row of that would really spook a lot of people. 60 and a quarter is where the 7-day vol is in Bitcoin right now. That puts it down from 84, almost 84 and a half on the show this time last week. So vol obviously coming in on the weekly front. Let's go out to the monthly front, see how vol is looking out there. It was 65 and a half on the show last week, 56 this week. So down almost 10 points, about 9.5 points on the week. Going out 6 months to the 180-day vol. That vol actually ticking up ever so slightly. 62 and a half on the show last week, 62 and 3/4 this week. So vol ticking up ever so slightly on the 6 month. The hodlers are going to hodl. Nothing's going to stop them, listeners. Let's go out to the Skew, see what's going on out there. Last week on the show, obviously things were pronounced to the bearish side last week. -10 on the weekly Skew. You don't see that too often, listeners. That obviously has come in now down to about a -2.6, so still bearish, but in the much more manageable territory. A 30-day Skew last week was a little over a -4, about -4.2. Coming in and started the show today, I would say mostly flat, about -2/3 of a point, so not even a full point to the dark side. So pretty much flat right now. And the 6-month Skew was +3 a week ago, +3.4, so ever so slightly more bullish this week. Let's get out to some of the ETPs. You folks like to trade BITO 19.25 when we kicked off the show, up 1.5 points, so getting its luster back. I was traveling last week, so I didn't have time to do a lot of trading. I did try to blast away at some of those 16.5 puts. I got up some decent levels. I did miss them, though. I was traveling. They moved away from my limit. That would have been a good do, as they say. They were paying a decent amount. And again, if you don't mind getting into BITO around those levels, then not a bad trade at all. BITO, of course, rallying since then, 19.25 right now. The ADV continuing to move in the right direction, 105,000 contracts a day now. That's up 13,000 from this time last week. So BITO, once again, bringing the heat from a volume perspective. Not so much today. Seems like things are quieting down a little bit today, which, again, given the madness that was last week, not the worst thing. 42,000 contracts on the tape right now. The big dog out there today, 4,000 of the August 20.5 calls. So these are going out this week, and they're about $1.25 out of the money. You like those, listeners? Somebody liked them to the tune of $4,065. And what are they trading for? They're trading for prices, looks like from about 11 cents all the way up to about 26 cents. So quite the range on these today. You like those, listeners? BITO's got to get in gear if those are going to become relevant out there. The big dog position still the same, 124,000 of the Jan 30 calls. By the way, the vol out there right now, 30-day vol, 59, down 11 points from what it was this time last week. And then if BITO is not doing it for you, let's present Greg's favorite. It's BitX 2760, up about 3.75 points from last week. The ADV also ticking up to about 22,000 contracts. That's nothing to sneeze at for a levered 2X product out there. That's up about 1,000 contracts on this time last week. In terms of action today, we got about 12,000 contracts on the tape. So it doesn't seem like we're going to hit it with about half an hour left in the session. It doesn't seem like we're going to hit that ADV, but again, the last part of the days can be crazy lately. In terms of 30-day vol, it was 115. That's still frothy, but that's down 19 points from what it was last week. That shows you how crazy things were last week. Again, the big position in BitX options right now are a little over 7,000 of the Jan 70 puts. And not to be outdone, listeners, we also have our old friend Mara, 1565 when we kicked off the show, down a little over $1, about $1.10 from where it was this time last show. The ADV right now is 289,000 contracts. That's down, looks like about 13,000 from what it was this time last week. So Mara calming down a little bit. 230,000 contracts on the tape today. So something to bear in mind out there. Vol-wise, 30-day vol, it's pretty much 90. That puts it down about 17 points from what it was this time last week. So again, things a little bit quieter out there on the Mara front, which is not the worst thing at the end of the day. In terms of most active trades today, it's 11,000 of the August 16 calls expiring this week, and 10,000 of the October 17s. Let's just look really quickly, listeners, to see what each of those were going up for. The 17s went up for $2.05. By the way, if you're curious, Mara has earnings on November 7th, so you're not getting them in the October cycle. You know what? Looks like a synthetic / straddle went up on the 17 strike 10,000 times. So that's probably where the lion's share of that action went up out there today. Let's look instead at those AUG 16s, 11,000 of those bad boys. They went up for prices between, looks like 50 to 70 cents today. So interesting. Again, this is a weekly call, so Mara's got to get it into high gear if they're going to make those calls pay off. And if passes prologue, folks are probably buying those, but intriguing out there. 39,000 of the SEP 30 calls. That is the number one size position out there. Not looking so great right now out here in Mara. Let's see if the altcoin universe is keeping pace, listeners, as we head out there next.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, let's get to it. Time for a little bit of fun out there in the altcoin universe. I always enjoy breaking down the bottom half of our top 10 out there from a market cap. Let's see, that's where the battle is happening week after week out here in the crypto market. That's where the slugfest, the top 5, they really don't change that much. But the bottom half of the top 10, they are fighting for every point of market cap out here. Number 10 this week, it is Cardano. By the way, it cost you $12.1 billion to break into the top 10 this week, so slightly higher than it has been of late. Number 9, interesting, Doge fall into the number 9 spot this week, $15.3 billion, so losing its tug of war with Toncoin that moves into the number 8 spot, $16.1 billion worth of market cap. Number 7, it's XRP, $31.8 billion. Number 6 is USD Coin, $34.5 billion. And then number 5 and above strip is pretty much unchanged of your week. Number 5, it's Solana, $67.5 billion. Number 4, it's BNB, $74, almost $75 billion. Number 3, it's Tether, $115.6 billion. Number 2, it's ETH, $320.5 billion. And number 1, the big dog, Bitcoin, $1.1 trillion worth of market cap. Let's get out to ETH land now, see how things are settling in after a very wild week last week. And ETH, like Bitcoin, looking mildly higher this week. We're at 24.72 on the show last week. 26.61 right now puts us up nearly 200 handles, about 189 handles on the week. The high came again last Thursday, 26.85, so slightly higher than we were at the start of the show today. The low was last Wednesday, actually, 23.41. So intriguing range out there. But unless we're really rock'em sock'em robots again this week, those crazy vol and skew levels we have from last week have to come in. And that's pretty much the case again. On the show last week, the weekly vol was a whopping 103. That's not that sustainable unless things are really going crazy. And that has come in. It's still frothy. It's still impressive, a 77, but down quite a bit, obviously, from where it was this time last week. A 30-day vol coming in not quite as aggressively. It was a 79 on the show last week, 71 this week. So still 8 points. But still a frothy 71 in the monthly vol. And then going out to the 6-month vol, we were at a 77 this time a week ago, 74.25 right now. Let's get out to the skew. The skew was obviously whipsawing like crazy last week, especially when you get into the weekly skew. We mentioned on the show last week, we got down at one point, I think it was over the weekend or maybe in the early hours of Monday morning, got down to a negative 25 in the weekly skew. That's the lowest I've seen it in quite some time. As of showtime last week, we had come back to a comparatively reasonable negative 10, but still very bearish. And you know what? Hanging out right now on the 7-day skew, we're still pretty bearish, negative 5.25. So maybe that shows, at least in the near term here, there's still a little bit of downside concern on the ETH front. Going out 30 days, that hasn't really changed that much. It bottomed out at around a negative 4 on the show last week, so that wasn't as bad as you would think. It was a negative 2.8 as of showtime last week, and right now, negative 2.5. So the skew right now on the monthly side, looking very similar to what it was this time last week. And going out a full 6 months, it was positive 4.5 on the show last week, positive 4.9 right now. So hodlers, they're still having a ball, hodling up a storm out there on the long-term ETH front. And so we're talking ETH. Let's get out to EETH. The only real, I'd love to talk about the slew of ETFs that just got approved, listeners, but there's no options approved on those. So unfortunately, if we're talking ETH ETFs, you really got to only talk about EETH. I know it's not what all of you hope for. It's not on the spot, but it's pretty much the only game in town. And by game, I use that term loosely because the ADV is only 172 contracts. We're just talking about Mara doing close to 300,000 contracts a day, Bitto doing over 100,000 contracts a day, even BitX doing 22,000 contracts a day, and EETH doing a whopping 172 contracts a day. So it's barely worth mentioning. Today, a whopping 29 contracts. So doesn't seem like ETH is going to be the salvation on the ETH derivatives front. Hopefully someday soon we'll get some clarity from the SEC in terms of options on these Bitcoin and ETH ETFs, and then we can really have a party here on the show, listeners. 'Cause I know for a lot of you that is the moment we've been waiting for, and that's getting back to what our guest was just asking about. You know, what is going to be the inflection point for crypto derivatives here in the US? You could argue maybe it's already happened with the Maras and the Coinbases of the world, but in terms of products that actually track the underlying, at least attempt to, we don't really have those options yet. So be interesting to see when we do, or even if we do get some clarity. If you want more insight into that, check out the interviews I did back at the Options Industry Conference here a few months ago. They're on our network, listeners. Go back into the archives and check them out. I asked that question specifically about the Bitcoin ETFs to a number of different people who are very active in the U.S. derivatives industry. And unfortunately, a lot of the news I got back from them doesn't seem like it's happening anytime soon. So maybe hold your horses on that front. It doesn't seem like we're going to have many times soon, unfortunately. What we do have, though, in the rest of the altcoin universe is a little bit of a rally on our hands. Solana, 133.61 a week ago, 144.60 right now, so up pretty much exactly 11 points on the week. So Solana getting back some of its gusto. XRP also managing to rally as well. 56 cents, almost 57 cents on the show this week, 49 cents a week ago, so up nearly 8 cents on the week. That's not a bad rally for XRP, given that it usually seems to be scared of its own shadow these days. Our friends at Amber Data, they posted something. Again, you should be following them on Twitter, listeners. They have good nuggets intro week out there, and they say this recent activity may be due to the speculation that XRP is going to get an ETF as well. And Greg's been on here before talking about the nascent prospect of a XRP options market. I kind of chuckle at that because, I mean, you could just see the underlying is 57 cents. It's not exactly screaming for the need for derivatives, but he's been more adamant on that front than I would have assumed. So it's kind of interesting. He said, as of this writing, I think this came out earlier this week, XRP's 110 call option set to expire at the end of the month on the August, just a couple of weeks, had an open interest of 4.3 million contracts. My goodness, $1.10. We haven't seen XRP north of $1. I can't remember the last time it's been that, let alone well above that. So $1.10 call? My goodness, the most favored among all available XRP options on the exchange. Remember, they do track XRP derivatives data over there on Amber Data as well. We don't talk about it on the show that much because it kind of makes me laugh, but there we go. There's real money being put to work thinking that XRP is going to get somewhere near 110 by August expiration. Wow. The open interest on that strike has increased by 838,000 contracts in the last 5 months alone. So some folks are putting their money where their mouth is. I don't know what those out there look and see what they can't be trading for much, but again, any outlay on a call option on the 110 strike, even if just a few cents, the underlying was 49 cents. Sweet. You could buy a ton of the actual underlying. And guess what? That's a perpetual call. Going back to perpetuals, buying the underlying is a perpetual call option. It never expires. So for a few more cents, you could actually own the never-ending call. And instead, they're buying the 110 calls expiring in a couple of weeks. That is, I think, intriguing to put him out. I'm looking at the graph that Greg tweeted out. And man, yeah, he's right. This OI has just jumped off the charts here just in the last few months. So I know for a lot of you, XRP not viable here. Again, regulatory issues here in the U.S. But something to bear in mind. If XRP gets over $1 again, man, that would certainly be interesting. Doge not getting to $1 anytime soon. 9.5 cents last week, 10.5 cents this week. So rallying a full whopping penny this week. Litecoin 56.53 last week, 61.67 this week, up $5.14 on the week. Cardano 31.6 cents last week, 33.8 cents this week's up a whopping 2.1, almost 2.2 cents. And then we've got Polkadot 4.21 last week, 4.57 this week, up a whopping 36 cents. And everyone's favorite Shiba Inu. Last show was a million zeros, 1310. This week, a million zeros, 1376. So clawing our ways ever so slowly towards everyone's favorite, the Shiba Lambo. right, listeners, that is going to do it for us here on the Crypto Rundown this week. Want to thank our guest, Darius from Vertex. Check them out, Vertex_protocol, if you want to learn more. Unfortunately, most of you will have to be outside the U.S. to do that, but if you are, I know a lot of our listeners do come from this show in particular from overseas, something you're probably already aware of the Vertex folks, but if not, check them out. Intriguing stuff there. And of course, while you're checking things out, check out our friends over there at Amber Data, amberdata.io, the place to go to kick the tires and light the fires. If you did that, you too could see some intriguing nuggets like this explosion of OI in the 110 calls and XRP. Are we heading there sometime soon? Someone's putting a lot of money to say we are, so intriguing stuff afoot out there, listeners. Amberdata.io, the place to go to kick the tires and light the fires. That's going to do it for us on the network today. Back again with our usual array of content throughout the week. Remember, if you're just listening to the Crypto Rundown, listeners, you are missing out on a whole heck of a lot of great content. We got more interviews coming on the network tomorrow, so stay tuned for those. Wednesday, of course, the show you should all be listening to, Options Bootcamp, gets you really in some options trading shape at the end of the day. Also got a great pro Q&A with our buddy Mr. Vixologist, so if you like talking all things vol and you have questions about it, and who doesn't these days, then make sure you're checking us out over there at the pro, theoptionsinsider.com/pro. is the place to go, listeners. Back again on Thursday for the option block, as well as This Week in Futures Options, another show where we get into crypto on a regular basis. Just did it again last week, so make sure you're checking out that show if you're crypto curious. Friday, Volatility Views, who will join us on the guest seat. Got to tune in to find out every week, as well as, of course, one final time for the pro folks out there coming back for a little bit of options oddities. Then we're off for the weekend. Crypto, no rest for the wicked, though. And then we're back again on Monday, another episode of the Crypto Rundown. Stay safe out there, everybody.
The Crypto Rundown is brought to you by Amber Data. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amber Data delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amber Data eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.